Hey guys, today we are going to cover next standard, which is IAS 36 impairment. And what is impairment? Impairment of assets, and we will further explain this impairment in today's lecture. And again, I am just give a little bit how we will cover this uh, lecture. First, I will explain the basics of the lecture of impairment of assets. Then. All you need is just to make all these pictures in your mind and just keep your mind active. And here there is no calculation. All you need is just take this video, and this will help you to provide the basics of impairment of assets, and then you can understand your class teacher's lecture more clearly. So this is the first thing, how we will carry the lecture, and I also explained this in the previous first lecture. Now, uh, how it relates to our previous accounting standard. So previously we have covered IAS 16, which is related to the property, plant and equipment, and today we are going to cover impairment of property, plant and equipment, which we have covered previously. And this is the impairment loss which we are going to cover in this lecture. So when we will apply the impairment, so the number one thing is the business was going in their normal course, everything is okay. The property, plant and equipment comes to the business, and heavy machinery working in the factory, everything is okay. And at the year end or any point of the business, uh, uh, we find an indication. And what is this indication? This indication indicates that our asset will not give the uh, uh, results that we are getting. Sorry guys, I am in home, and someone was calling me outside the home. That's a little bit, we can say, the disadvantage of living in home, and we cannot make the ordinary course of business like this. So these are the things that happens in the home, so we just have to bear this. So what is the relation of this standard to the previous standard? The number one is the business was going in the normal course, and then the business find the indication, and this indication indicates that our asset reduces some value. So then whenever the management finds this indication, then they will check their carrying value. And how this carrying value comes, it depends upon the policy. If the company is using cost model, then we will take care about which depreciation method is used by the company. It may be the straight line method or reducing balance method. In straight line method, we know that the depreciation is consistent. We charge equal depreciation, and then we will less that depreciation from the carrying value, from the cost, and then we will get the carrying value. And if the company is using revaluation model, then we will find that we will make the revaluation format, and then we will mostly in this we will use the straight line method mostly. And we find carrying value mostly by straight line method. And let's suppose the business was going ordinary course of, and when we find the indication, we have the carrying value, and now we will find in the second moment the recoverable amount. And how we will find that recoverable amount? We have two values. First one is fair value less cost to sell, and then we have value in use. And First, how we will find the fair value less cost to sell. First, I will explain the fair value. Fair value is the market value that the company will receive by selling that particular asset in the ordinary transaction. And cost to sell means that incremental cost that will occur when the company will sell that particular product. So this is completely external. There is no internal effect in this value. And now there is value in use. In value in use, there is the internal as well as external factor. Internal factor, it depends on the capacity of that machinery, whether it is doing well or not. And uh, and then we will apply the discount rate according to the internal. I will also explain the discount rate. uh, so how we'll find the first we know that this is internal plus external. Internal, uh, the capacity of the plant, your machinery. And how we find that capacity? First we will check how many cash inflows by using that machinery, how many cash outflows uh, to generate the revenue from that machinery. So we will get the net cash flows. And uh, after the end of the useful life, we will also include value of sales proceed. So the net cash flow increases, and then we will apply the discount rate. And what does discount rate means? uh, it means that present value of cash flow which we will receive in future. So because we are measuring the current uh, date, that's why we are using this discount rate, so that we can find the value of the future cash is according to the now, so that we can compare our carrying value with this value, and this will give the most accurate results. So we have understand the value in use, fair value less cost to sell. And we find this value. We have this value, that this is ordinary course. We find indication, we find this value, compare this value. If now this is the tricky point. If this value is lower and this value is higher, then there is no impairment. It means that the value is already lower, that the machine is working in the business, this is already low. But if this value is higher and this recoverable amount is lower, it indicates that company cannot get the value which we they are using inside the business, uh, as by considering this value. And we made these changes to find this value. And we will use the higher value. Let's suppose if the market value is little bit lower, just because of certain indications, like if new technology comes into the market, then already existing markets, machinery that are using in the companies, and they are all uh, lose their value as compared to the market value. And the other value, value in use, let's suppose if company made certain modifications to the existing machinery, then they can generate more revenue. It means that their recoverable amount is more, so there will be no impairment if this value is higher. So, but if there are no indications of that companies doing good, companies machinery or new technology comes, and all the existing machineries are obsolete, we can say, or not have lose their values. So then this value is lower. And this value, if this value is lower, there will be the impairment loss. And uh, this entry you will also learn in your class academies. And the accounting treatment of this value is impairment loss debit, accumulated impairment loss credit. So we have find the impairment loss. And in this same standard, there is also the reversal of this impairment loss. So how we will find the reversal? First, let's suppose we bought the machinery in 2016. Business was working good in a normal way. Then in 2018, company finds certain indications of impairment. This indication, this requires prudence concept. and company applies his judgment that yes, um, we cannot get the value of the current machinery because of the market trends or value in use. Maybe the machinery may be idle, so its value is automatically reduces. Then they will apply the calculations, they found the impairment loss, then they will show this in their financial statement, and this will move to the PNL as an expense. And uh, this value shows that the company is applying prudence concept, and they are honest. But it can also be used in certain negative, we can say that we should not have to use, they can uh, automatically reduce the value and show their impairment loss more, so that they can avoid tax. So this can also be used by for this purpose, but this is wrong, this is unethical. So always try to be ethical. And we covered the impairment loss. Now we are going to move the reversal. How the reversal? 2016 buys the machinery doing good. 2018 find indication, apply judgment, found the impairment loss. In 2020 maybe the market trends again change, the new technology was may have some errors, so that our value is automatically arises. And in this value we will give the true uh, justifications. And then in a reversal there are two cases. First one is cost model, then the revaluation model. If company is using cost model, and then this is the cost model, this is the revaluation model. First I am going to explain you the rule. What is the rule? Reversal of lower, reversal of impairment loss, lower of recoverable amount, and WDV had the impairment never took place. And what these values show: first, the recoverable amount. How we calculate the recoverable amount? By using this fair value market, value in use internal plus market, and then the WDV. Here we will use the cost model or evaluation model. If the company is using cost model, they will just compare the cost and ignore all the impairments, find the accumulated depreciation collectively by applying the formula, and we will get the carrying value. uh, we get the carrying value, we get the recoverable amount, we will select the lower. If there are indications, we will uh, reverse the impairment loss. And there are one tricky point: the impairment loss that we are going to reverse must not be higher than we are recognize this impairment loss. So okay, so this is logical, because if we reverse more than the actual loss, it means that uh, company is getting some unfair advantage, just like revaluation gain. So if the value is higher than the actual, and then we will this will be the revaluation gain, which we will cover in revaluation model. So let's suppose if the company is using revaluation model, we get the recoverable amount, and then we have to find the carrying value. How we will get the carrying value? There is the tricky point here also. And in this we will not take the cost that the company purchased the machinery, although we will use the amount of revaluation, latest revalued amount. Maybe the revaluation performed in 2018, and there are indications of reversal in 2020. We bought the machinery in 2016, but we will not use the cost of 2016, we will use the revalued amount in 2018. And we will find the subsequent depreciation also, because this will give the more accurate information, and this is the latest. And we will show this information in our financial statements. And what we show in financial statements, we show the exact and more accurate and more latest information in the financial statement. That's why we use the latest revaluation surplus and revalued amount. And in cost model, how we will reverse, we will just take this amount. This is the expense in the previous year. Um this will be treated as the revaluation. Sorry, this will be the gain, reversal of impairment loss. So this will be the gain in that relevant year in which we find the reversal indication. And in a revaluation model, there is the tricky point. If there is the revaluation surplus and there is a impairment loss, first we will reverse the impairment loss, then the remaining balance will be the revaluation surplus. So this is the whole uh, IAS 36 standard impairment, how it relates to the previous standard IAS 16 carrying value normal course of the business. This is the new point, impairment loss. If we find the recoverable amount, just one indication and this standard comes. This is the general rule. And then you will find the calculations and do calculations in your class. If you hear this lecture, you have uh, the overall knowledge of this impairment. And you also have the know that how it integrate to the previous standard. And you will build the concept in base, and you will understand and absorb your class teacher lectures very efficiently and more accurately, and this will retain in your mind for the longer periods. So this is the whole standard, and now the standard ends. In the next video we will cover the next standard, and the same format, and this will helpful for you to listen the lecture and make a base so that you can understand the class teacher. Because there is the one problem, many students take lectures in their class, and they take the whole lectures but they cannot understand the words, or we can say the logic what teachers are saying. The main problem is that there is no integration. Integration means the connection, because teachers don't give the connection to the previous chapter. They just teach and students in a flow, and they think that everything that happening in their mind also happening in the students mind. But there are some students who are below average and they cannot understand what teachers are saying. So for those students these lectures are so much important, and they also have to uh, do some self research so that they can also find some other points. So this is the end. Thank you.